anybody in any country who has the ability to shift part of the pension fund to physical gold, not paper gold, must do that.
Ladies and gentlemen, as always, the time flies. I welcome there Egon von Greyerz in front of a new background. Egon, great to see you. Golden times. We have much to discuss today, and the main topic is Fort Knox.
Yeah, no, very interesting. Yeah, Jan, as always, to talk to you. And the this is what you see behind me is a work of art that we have in our office in Zurich.
Fits to the business model. Egon, before we come to Elon Musk, Fort Knox, and a possible crime story, I start with three interesting headlines from the past days. This is number one. South Korea's mint has temporarily suspended sales of gold bars, adding to signs of widespread tightness across the market for physical precious metals. The Korea Minting and Security Printing Corp said it's facing problems with sourcing supply and managing demand, etc. China pushes insurance companies into precious metals. As Bloomberg reports, 10 insurance firms, including PICC and China Life Insurance Co., two of China's biggest, will be able to invest as much as 1% of their assets into bullion in a program that became effective last Friday. That would translate into a potential of 27.4 billion US of funds. And last but not least, big banks bleeding gold bars. Chinese banks are running out of gold while Russia's commercial and sovereign reserves are rapidly being depleted as two BRICS nations face sky-high domestic demand as prices set new records. But I have to add one note to this Kitco article. Those are, of course, not the official Russian state reserves. I think that is one error that carries through all those articles. If you look at the official reserves, they are still high and not sinking. They must mean the commercial banks in Russia that sell a lot of gold right now, because that is not reported widely. There is a high inflation in Russia, and China is facing literally an economic breakdown. So, Egon, I think finally we are there, that more and more people all over the world are realizing the seriousness of the crisis and moving slowly into gold.
Yes, yeah, Jan, as always in life, things are a process rather than a single event. As you know, we've been helping people for 25 years now to preserve wealth through physical gold held outside the banking system. And I've said for many, many years, we haven't started yet. We built up a big business, a lot of investors in 90 countries in the world, major investors, and I don't think we've started yet. The move is starting now. Obviously, we know that sadly, the market is always a price following mechanism and not anticipating moves. We have recommended gold since $300. That's when we started 2000 and beginning of 2000. But of course, still, nobody owns gold. You have to understand that the average holding in the world, total investment in gold is only 0.5% of world financial assets. So, but right now we are obviously seeing shifts taking place because there are shortages developing in certain places, certain countries, and obviously the futures market is the biggest culprit here by having masses of futures contracts outstanding on 100 times the goal they have, at least, probably much more. So now we're seeing this rush to deliver physical gold from London to New York to the COMEX. And we're seeing certain banks, as you're mentioning, in the world having temporary shortages. Of course, there will be shortages. Remember that 3,000 tons roughly of new gold is mined every year. And that during you just take the last 25 years in this century, and has been absorbed easily by the market. And now you're seeing an increasing demand. And as I kept on saying, that demand cannot be met by physical gold at today's prices. The only way to meet that demand is by higher prices. So if gold is now $2,900, and people want to buy gold, they're not going to get much gold for that. So they have to pay up. And this is why the price, as I said, will not just go up by percentages, but by multiples. And that's the move we're going to see now because there are shortages everywhere in the world. The Swiss refiners that are the biggest in the world are still finding or getting gold deliveries because they obviously get them from the mines, and they always get part of that 3,000 tons mined every year. But out in the market, which is as sick as the whole of the financial system, where there is so much paper gold created, um, that paper gold demand, when people are not getting worried and asking for delivery, that cannot be met. And that's going to cause panic in this gold market in the coming months and years. And you're seeing the beginning of it now.
Yes, and there is an interesting development in the USA, Egon. We know they are now at an annualized rate of over $1 billion in interest payments, and the new Secretary of Treasury said something amazing. We are going to monetize the asset side of the US balance sheet for the American people, Besant said last Monday, the new Secretary of Treasury, when Trump signed an executive order calling for the creation of a sovereign wealth fund. We are going to put the assets to work, and I think it's going to be very exciting. The Treasury Department did not respond on a request for comment, but the definition of monetization means changing something into money, or at least expressing the asset in terms of a currency. We know, Egon, the USA officially has 8,000 something tons of gold, 261 million ounces, I think. And if you revalue this to the current gold price, you have 750 billion US dollars roughly. I calculated that it's around 9 months of interest payments, so that would be a total waste. But if you revalue it to 150K per ounce, then you could pay the complete US state debt, but on the back of what? I think a complete global financial meltdown if it's intended. What do you think? Is this something they might have in mind or a stupid idea?
You know what, Jan? If they have the gold already, the 8,000 tons, which I doubt, and many other people doubt, because we haven't seen a proper physical audit of the US gold since Eisenhower's days in 1953. But if they have the gold, let's assume that, and to be generous to them, I don't think they do, but if they have it, so this now revaluing the gold to market value, that doesn't make America richer. It's just bookkeeping. That's all it is. They shift one post in the accounts to another post, and then they call it they've made money. They haven't made money. It's the same thing, and they're just creating more debt and blowing up the balance sheet more with this. So in reality, I don't see it as anything important. And I would say first, if they're going to revalue their gold, shows your hand. Shows your hand, the US Treasury. Shows your hand. Shows the gold in Fort Knox. And remember, central banks, when they lend gold to other banks or to the system, the LBMA system, then as normally often just a bookkeeping position. Most of the time, they keep the gold in the central bank, and but they have lent it out. It's not theirs anymore. It belongs to whoever bought it. An LBMA bank, a bullion bank, for example, that buys the gold and then sends it to Switzerland to break it down into kilobars, and then sends it on to China or to to Russia or India. It's mainly to China and India, of course. In my view, the gold there could be gold in Fort Knox and in the Fed, but that gold might have been lent to the market or leased. And when they lend it to the market, they still call it their gold, their physical gold, but it isn't. It's all it is an IOU. And that IOU, if somebody then claims the gold, which is happening now, parties around the world are demanding delivery of the paper gold. And this is what the world cannot cope with, as I said before. But there's so much more paper gold issued than there is physical gold. So this squeeze is going to continue, Jan. And that is what's going to trigger gold going up by multiples. On top of that, remember that the BRICS countries are trading in real gold and they actually buy gold, they hold gold. But both China and Russia that are declaring a couple of thousand tons each as their official gold holdings probably hold more than 10 times that in reality. Oh, and that is not declared by them officially. They keep it a secret that a lot of people like myself are quite certain that they actually have a lot more gold, whilst the US probably doesn't have the gold they say they have. So again, I'm gonna repeat: show us your hand, US Treasury. Show us actually the physical gold you have, and that is actually yours without any claim on it by any other party. When we see that, we can talk about an actual bookkeeping revaluation of the gold that has any effect. But still, as I said, it's only bookkeeping. They're not becoming any richer.
Our audience, Egon, if you want to see the ratio between paper and real gold, just go to US debt clock and there you find it, also paper to silver ratio. You gave me the keyword already, Fort Knox, and Elon Musk recently wrote something that might cause some nervousness because he want to have a look to the gold bunkers in Fort Knox. Here we see it and it's gone. And what is he writing here? I sure hope it's still there. So this is already causing suspicion that would be interesting. We all know the famous James Bond movie Goldfinger. There you saw gold bars. If they were real, who knows? But what we know about Fort Knox is we see all the time old pictures from the 50s, maybe from the early 70s, but that's it. Nobody has been there for a full audit. And of course, you know, Ron Paul, his son, they want to kick off now a movement to have a firm audit. Tech billionaire Elon Musk has his sights set on an audit on the US gold reserves at Fort Knox through the Department of Government Efficiency after it was revealed there is no yearly review for the world renowned stash. Senator Rand Paul, who invited Musk to review the gold reserves on X over the weekend, joined Fox and Friends to discuss a need for greater transparency about the massive reserve after trying to verify it himself for a decade. So they for sure want to have a look at Fort Knox. And as I just said, Egon, there was no firm audit since the early 50s. I think they will already know if it's there or it's not there. But if they publish officially what they find, and maybe they find it's less than officially announced, then we might see chaos. And this might even be a reason for shifting so much gold to New York right now. Who knows? You cannot rule out anything. I think this is also supporting the gold price.
Yes, definitely. There are shortages, as we said, and and more will be revealed if there is an audit. I think they will refuse a full physical audit of all their vaults because I think that they know that they don't have the amount of gold they have. I said might have, as I said before, they might have it physically, but it's been lent out and it's actually not their gold. Um, and no one's going to believe any revaluation of gold decided by the US based on paper gold, which it is at this point until it has been audited. Uh, but so you have that factor which is going to drive the gold price, but then you also have the constant demand of gold that's taking place now, which is a real demand, not a bookkeeping event, and that's what's going to continue to drive the gold price up. And as we have discussed many times, an important factor is that when the US froze their Russian assets, and every central bank in the world has decided that we are not going to let the US control our reserves, dollar reserves by being able to confiscate them. So they all want their gold stored under their own control. And as I said before, the public has not awoken yet to what's happening. And that's why, it's an absolutely minuscule amount of world financial assets in gold. If we go from 0.5% where we are now to 1% or 1.5%, there's not going to be any gold at the current price to make that increase. The gold has to be revalued substantially by the market. I'm talking about market, not a bookkeeping revaluation. That means nothing. And whatever the US does, the market will override that because the BRICS countries don't give a damn about what the US does with its gold and how it values it. The market will determine the price of gold, and especially since the paper market. And I've been saying for 20 years at least that paper market will blow up one day. It is not real, and then it cannot meet its commitments by delivering gold against the contracts outstanding. And that will create a squeeze that will, as I said, shoot the gold price up to heights that no one can understand at this place. That's going to happen. It's not going to be overnight. It's going to be a gradual process, but we're seeing these shortages emerging already now, and that's just the beginning.
Yes, and I also always say to my audience, you have to have gold and silver now, although it might be overbought on the short term, but who cares? The money printing goes faster than those overbought situations. So you have to
Yeah.
be in this market. Egon, let's finish the session today with 3 questions from the audience. The first one is, should I invest my pension money into gold? And if so, how? In Switzerland, you have a so-called Freizügigkeitskonto. I have translated this as a vested benefits account for people who want to take their pension money with them. Speciality of Switzerland, but in general, pension money into gold. What's your opinion?
I've been advocating that for years, Jan. Remember, pension funds have three major assets. That's stocks, bonds, and property. They are all bubble assets that at some point, starting this year, I'm sure, maybe will be in the first part of this year, those markets, stock markets especially, property market, are going to start declining rapidly. Pension funds will then not have the backing of their commitments through real assets, and therefore anybody in any country who has the ability to shift part of the pension fund to physical gold, not paper gold, must do that. Because remember, most pension funds will never be paid out to the pensioners in coming years because they will not be able to maintain the value enough for their commitments. So that's why it's so important to have physical gold. And there are different rules in different countries, and we cannot go through that in detail. But just remember, whenever you can, change your pension fund asset as much as you can to physical gold. And if you can control it yourself, even better. Not possible in every country, but in some countries it is.
Second question, Egon, what's the best strategy for the ratio trade when to shift between gold and silver? Of course, you have to have a very long time horizon because that might take decades. What's your opinion on that?
That's a very important question. And this is a ratio I look at every day. Because as long as that ratio is now nearer 90, where it is, just under 90, the run in precious metals hasn't started yet, in my view. This is just now high demand for gold because there are shortages around the world of gold, especially the companies that have issued or institutions that have issued paper gold can't meet that demand. Silver is not taking part in this gold rally. And the real surge in precious metals will start when people start buying silver, and when that gold silver ratio comes down we said this now, 89 something. It's, in 2011, it went down to, the ratio went down to 30. And that was when gold was $1,900 and silver was $50. I think the next level where so now people should hold some silver. It's a fantastic opportunity. It's not wealth preservation to the same extent because it's very volatile, but there are also massive shortages of silver. There isn't enough silver around to satisfy investor demand, as well as, of course, industrial demand, solar panels, etc. That gold silver ratio, as I said, when it comes down from 89 something now to 87 or below 87, and then below 80, that's gold divided by silver. That's a gold silver ratio. Then the move is going to start in silver, and silver will lead this run in precious metals to the upside, and silver will then increase in price at least twice as fast as gold. So that gold silver ratio will come down. Right? Myself, I have as a indicative level that 30 in the gold silver ratio, which we saw in 2011. Maybe that's when it probably will stop and bounce for a while, and they could easily, go up double almost from 30 to 50, but the historical average is 15, so we could easily see 15 over the next few years. And remember, I mean, the psychological initial target of gold is not is let's say 10,000, because it's a good round figure. And I said 25 years ago, we are going to reach 10,000. That's not, in my view, the limit, because this change in demand for gold and the shortage of gold will mean that it goes probably a lot higher. I don't like to talk about prices, but let us take just as an interesting psychological target, 10,000 gold. If the gold silver ratio then goes down to 15, which is the historical ratio, that means silver price of $666. Some people don't like that number, but it's a real number, and so silver is likely to go up a lot faster than gold. But remember, it's a hell of a roller coaster ride. So don't hold too much silver. But I'd rather hold silver if you want to make money than Bitcoin, which I don't trust and is not a wealth preservation asset, and it's too volatile. So silver is a much more interesting if you want a little bit of more speculative investment, still in real precious metals that you can touch and take delivery of course, which you must do. And so that's how I see the gold silver ratio, and I see silver is now a very good, more speculative investment than gold, but still with the upside potential that we see, it's a real opportunity now to own silver.
I obviously agree, Egon. What else should I say? And a final question. What legal considerations should I keep in mind for storing gold and silver?
This is, of course, what we have been advocating for the last 25 years. Only buy physical, not paper, gold or silver. Have physical possession of it, don't store it in the bank. The banking system will come under pressure. And why should you take the risk of holding it there? People will say, yes, of course, but it's my gold or silver is segregated. Well, when the banking system comes under pressure, it'll be a real mess in the market. And then they will not know what is your gold and what's the bank's gold. And therefore, keep it outside the banking system in private vaults. Switzerland has some of the best vaults in the world. So also vaults in Singapore. We have vaults in both places. And I would recommend to investors to buy physical, hold it in their own name with direct access to the gold or the silver so they can actually inspect it, but then in safe jurisdictions and in the safest vaults in the world. But if you hold it within the financial system, then the risk is that you might not get it back, or it'll take years and years before the liquidators or people who have to sort out the mess of a collapse of the financial system. That will take a long time before they will be able to identify whose gold or silver is it, and in the meantime, your assets will be blocked. Therefore, hold it under your own control. So important, and especially in the times that we are going to see now. Yeah.
Absolutely, Egon. That was the final statements. I thank you for today. Buy your gold, keep it, store it well with renowned experts. Thank you, Egon. Till next month, who knows what will happen in between? Gold and silver are strong. I expect silver to gaining pace, but we will see. It always starts slowly and then accelerates. Thank you for today, Egon. Bye bye.
Thank you, Jan. I don't think we will have a dull moment in the next 2 years. Yeah, it will be exciting to say the least.
Absolutely. Grüezi. Bye
Thank you,
bye.
Jan. Thank you. Bye.